Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 28th of August, and as always on a Monday, we have Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, as our guest today, coming out from Singapore. Vishnu, it's always great to have you on the show.
Always good to be here, Brian. Thanks for having me this Monday.
Now, Vishnu, for a start, we had two significant events towards the end of last week. We had the Jackson Hole Summit, as well as the BRICs Summit, which was held in South Africa. Now, for a start, what are the key takeaways from Jackson Hole?
Well, for Jackson Hole, I think the message seems to be that central bankers, global central bankers led by the Fed, they've done a lot, but there appears to be more work remaining in terms of anchoring inflation, especially if you're looking at inflation from a slightly more core kind of read. So that's the first thing that came across. But it was a very nuanced message because Powell did allude to the fact that uncertainty around policy, in particular uncertainty of both over tightening or under tightening, have increased. So despite the fact that he says, look, the default is that they maintain a tightening bias, they decide based upon data, but he alludes that look, they need to move very carefully, calibrate moves, because policy has already been tightened a lot, and that's quite evident for everyone to see. The ECB also chimed in, both alluding to factors that may have changed, such that the old playbook may not fully apply as they go forward. So there's a lot of humility in admitting, not really sure, and I think to use his term and his particular turn of phrase, Powell actually said it's like navigating under the stars. On a cloudy night. So that's really the kind of thing that they're alluding to. The takeaways for us are we're still quite far away from a bona fide pivot in the sense of cutting rates, because Powell came out to say at the very least they need to maintain restrictive rates until they've got a lot of comfort about inflation being anchored. So that's the first point that came across. The one that piggybacks on that point is, so the dollar may not fall off so quickly either, especially if the ECB is not stepping up its game vis-a-vis the Fed. So we would end up stuck with high rates, potentially a high dollar, much more increased uncertainty, and I think what goes unsaid between the lines is downside risks to the economy. The Fed is willing to accept some because he actually said he does believe we need a little bit of below trend growth and some slack in the labor market. I mean, that's euphemism for saying, actually, you know what, we need to do with a little bit slower growth, so on and so forth. So that those were the key takeaways for us. Was it revelatory? Not particularly. Was it revolutionary? Certainly not. But it does tell us that the focus remains on the other R, which is rates, rates, rates. And that's probably going to be the key takeaway for a lot of markets to chew on. My suspicion is this year there'll be this week, there'll be a continuation of what we already saw last week, a bias for a slightly stronger dollar, and also a bias for yields to remain fairly elevated.
Now, on a different note, we've got to take the BRICs. There were significant developments at the BRICs Summit in South Africa, where new members have been admitted. What is your view on the BRICs and its expansion?
Yeah, the membership is growing. Although I think what we need to perhaps bear in mind, there are a few things around it. A is the new members added. There's some significance, but it doesn't change the game very much. The significance, I think, comes about from the oil-producing countries. Saudi having a very large economy, relatively large economy. And so it also creates a more holistic BRICs where for the oil production capability of BRICs has stepped up, if we include the BRICs plus whatever, however we want to look at it. That's one angle. Certainly the imperative and the impetus to deepen trade and investment linkages, I think the ball has started rolling a bit more emphatically on that account as well. Whereas I think far loftier ambitions of trying to significantly diminish US influence or dollar dominance, I think those targets are a lot further away than one might be led to believe from usually the optimism and the headlines around such summits. It's a bit like your The fact that a lot of the terminology there was about the absolute size of all this GDP. If you put it together, yes, it's a very significant part of the global GDP. But here's the thing: conflating GDP with purchasing power can be quite misleading. So yes, in the longer term, the the middle income growth and all those are compelling stories. But today, imminently, and demand still comes from the West. We cannot fudge that. And if you look at GDP per capita, which is a lot more informative and even then overstates purchasing power, even on that account, the BRICs, if you take the BRICs together, they are less than a quarter of the US purchasing power. So really, this is getting slightly ahead of ourselves, and in particular for the dollar. While we think that bilateral currency usage between BRICS economies could grow, the biggest reservation on that account remains this, which is the incentive for anyone to store wealth in any of the BRICS currency now is still somewhat not compelling, and that's me understating it. It's no coincidence that the BRICS entails all the R currencies, from your real to your ruble to your rupee to your renminbi to your rand. None of these R's have got the capital R, which is the ability to replace the dollar. And I think
And that's
that
a very
is
good
the
point,
takeaway.
Vishnu, because one of the key themes around them getting together is really as a result of the weaponization of the US dollar when Russia invaded Ukraine. I think that's where this whole de-dollarization trend really started to gain momentum.
Yeah, absolutely. So the motivation is fully understandable. Unfortunately, the ambition is not anywhere near realizable today. To quote Lord of the Rings, when Gandalf said, "Do not tempt me, Frodo. The power that it wields is too great," referring to the ring, coincidentally a R as well. But in this case, the dollar being weaponized is it's not a question. It's always been part of the allure of being a reserve currency. And as we look for alternatives, what we need to bear in mind is, are we really getting rid of a risk, or are we merely substituting it? Anyway, in the very near term, the bigger picture for us is that as a store of wealth, you would need a far more compelling proposition. And the reality is, even if we were to frame the BRICS as a collective bloc with a currency to represent it, that faces very steep challenges, not unlike the Eurozone, where the fiscal fractures and the ability to synchronize and harmonize monetary policy, these will really get in the way of realizing those goals near term. But certainly on trade and investments, it's a very good landmark.
Now, Vishnu, on that note, thank you very much for your insights. Thank you for coming on the show.
My pleasure. Thanks for having me, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.